Hey, what's up, y'all? Winston Bennett. This is Should I Rent or Buy a Home Part 2. Okay. Should I rent or buy a home Part 2? In Part 1, just as a small overview, we talked about the difference between leasing an apartment or leasing a home versus buying a home. And we came to the conclusion that there's very few expenses in leasing a home or leasing an apartment. One, you have to worry about the monthly expense of whatever the lease is going to be. Let's say $1,000 a month. Let's add on to that utilities. Let's add another $200 a month. I'm just throwing out arbitrary numbers here. It could be more, could be less. Let's add in the cable bill. That's probably about it. Your garbage disposal. So let's say top it all out at $1,300 a month. Okay, so that's it for the apartment. Now, when you go to the deciding on whether to buy a house, let's focus. Let's park there. On purchasing a house, one of the first things that a bank is going to do if you have to get a loan for a house, if you're not paying cash for a house, one of the first things they're going to do is find out what is your credit score. Do you have a good credit score? Which elicits the question, what is a good credit score? I would say 680 and above. At 680 and above, you possibly can get a conventional loan, but if you want to be safe, you probably want to be in the 700s for a conventional loan. Let me asterisk everything that I'm saying by I am not a financial expert. Go to your financial expert, be it your mortgage person, your mortgage banker, your real estate agent, your tax professional. Go to those people. I'm not acting as that. I'm just someone who has been through the process. I used to be a mortgage banker. I used to be a real estate agent. I used to be those things, but it's been a while. So go to someone who does this on a daily basis that can give you the up-to-date rules and regulations on what's transpiring in the real estate industry. But just as a high overview, to just give you some basic information, when you're purchasing a home, they're going to look at your credit score, correct? You want to have a good credit score. There's something called a conventional loan where if you put 20% down, then you get certain benefits by doing that. So let's just give just a quick synopsis. If I have a $100,000 home that I'm looking at and I put down 20%, right? That's going to be $20,000 of equity that I'm going to put down on the home. What's my loan going to be? Well, I'm going to go to the bank for a loan of $80,000. Why? Because I'm bringing $20,000 to the table. So I only need a loan for $80,000. You see how that works? Okay. So what else do we have to consider? We know credit scores got to be right. What is the bank going to look at if we have to go to the bank or a financial institution for a loan? Well, they're going to look to see how much income you're making. What are you making on your job? The other thing they're going to look at is how long you've been on your job, how consistent you've been on your job. Have you been on your job for at least 2 years? If you're making some type of hourly wage or salary, they're going to look at 2 years of income. If you're making salary income, they may not look at 2 years. But if you're making hourly income, they may look at 2-year history on your job. The other thing they're looking at is gross income. You would think they would look at the net, what you actually bring in home, but no, they look at the overall picture of what's your gross income. Okay, so if I'm making $100,000 a year, they're going to break that down to a monthly. That's going to break out monthly of around $333.33 on the month. That would be the gross. Out of that gross, they're going to look at, okay, what are your bills coming out of that gross? What is your car payment? What is your insurance? What is your apartment now costing you? Okay, they're going to get what that total is. Okay, so they're trying to get to what's called the debt to equity ratio. And that ratio or that percentage has to be a certain percentage before they give you the green light and say, yeah, we'll make you this loan. The other thing they're going to look at is what's called the loan to value ratio. Okay, what's the loan we're going to make you versus the value of this home? Loan to value ratio. That has to be a certain percentage before they will make you the loan. Okay. One of the things on any of the houses me and my wife has purchased, we did this in the wrong order, but this is just because we like real estate. We would just go out and just start looking at properties. before we got a hold of a bank or anything like that, we just start going out looking at properties. Now, your mortgage professional, and particularly your real estate agent, is going to want you to go and get pre-qualified before actually doing that. What's pre-qualified? That's going into a bank or somewhere, talking to them about what you make on your job and going through the application process, getting pre-qualified. And that's where the bank will give you a letter and saying, yep, they're pre-qualified for the loan at this stage. Now, that doesn't mean you're going to get the loan. It just means you're pre-qualified. You still got to go through the whole underwriting process, where they dot every I, cross every T. That's where they get your bank statements, where they get some receipts from your job, showing that you make the income that you're saying that you make. So you got to verify everything with backed up documentation. Okay, so that's very important. So there's a lot of paperwork when it comes to getting a loan for a home. All right, so we talked about down payment in the last video. FHA, 3.5% minimum down. You can have a lower credit score on FHA. Conventional, 20% down. Okay, but you get better perks with the conventional loan if you can do it. In terms of looking at your income, they're looking at the gross, not the net. What's coming out of your income to see if you can really afford to tack on a principal and interest, P&I, principal and interest payment, taxes and insurance payment onto what you already, what your obligations already are, coming out of your income. So they're going to look at that. What else we want to talk about here? If you are given the ability to get a loan from a mortgage bank or a banker, they are going to want an appraisal done on the home. That's where they'll send someone out to really estimate the value of the home. They want to make sure that whatever the listing agent has put this, or the sellers put this house on the market for, they want to make sure it's worth that or more. Okay, it's not a good value to them if you say the house is worth, the seller says the house is worth $100,000, and they send out an appraiser, and the appraiser says, well, the house is only worth $80,000. More than likely, they're not going to make that loan, okay? Because that house has to appraise in order for them to make the loan. Everything has to be in line for a bank or financial institution that's going to say, all right, you're going to pay me my money back plus interest. Everything has to look good toward that end. Okay, they're not just in business to give you a loan, but they're in business to make money. Okay, banks are in business to make money, not only to help you, but also to make their fees. That's what the financial institution is all about. They're a great resource. We need them. So I'm not talking down about them. But thank God for them. You know what I'm saying? But they want to make sure that you're able to pay that money back, as any one of us would be if we owned a business. Okay. What else on purchasing a home do you have to be thinking about? We talked about down payment. We talked about credit score. We talked about the bank sending out an appraisal. What about a home inspection when you purchase a home? Don't you want to make sure that that house doesn't have bugs, roaches, mice, all those critters running around in your house? You got to have a home inspection. Also, a radon inspection is important today to make sure that there's not radon in the house. Make sure you're protected from that. These are all the things that you're looking for. We talked about what your payment includes. It includes your principal and interest. All right. When a loan is being made by the bank, they want that principal amount that let's say we used $100,000 purchase price. We're putting down $20,000, which means we're bringing to the table $20,000 of our own money. That means the loan is for $80,000, right? So you've got that principal payment on the $80,000. Well, the bank wants that which they loaned you, plus they want an interest amount, so that's principal and interest on the money that they loaned you. Now, either in the payment or outside the payment, we have to add in taxes and insurance. You got to pay real estate taxes on any property, okay? Taxes and insurance. The property has to be insured. What if you buy the house and the house burns down? Well, if you ain't got no insurance on the property, you just out of luck. You know what I'm saying? So you got to have insurance on the property just in case some catastrophic happens. A tornado blows the thing off the foundation. You got to have it covered. You know what I'm saying? So all that's very important. So we talked about those things: credit score, debt to equity ratio, loan to value ratio. Talked about your monthly income and how they're going to look at the gross on the monthly. Talked about taxes and principal and interest and all those sorts of things. So that's just a high overview of what you're going to look at when purchasing a home. Certainly, there's a lot more things that has to be looked at. You know, there's something called a disclosure statement that they will give you from the bank, also called an LE or loan estimate. What does a loan estimate tell you? First of all, loan estimate is going to have your name on it, but you're going to see something called loan terms at the top. And under that loan terms, it's going to give you the loan amount, what that bank is loaning you, that $80,000 in our example. It's also going to tell you what interest rate they're going to give you. Okay, so in this high interest rate environment, it may be 7.25%. You know what I'm saying? It's also going to tell you monthly principal and interest. That's that PI that we talked about, principal and interest. It's also going to tell you whether there's any prepayment penalty. What if you want to pay the loan off early? Are you going to be penalized for that? You don't want to be penalized for that. So it should say no prepayment penalty. What about a balloon payment? Can they call that payment due and payable at any time? You want to have a no beside that. You don't want a bank to be able to attach a balloon payment on this thing. No. So that's a little bit of what a LE or loan estimate will have on it. So you'll see that. Again, these are all things you want to ask your mortgage professional about, your banker, your real estate agent, who will guide you in these things. But I just wanted to give you just a little information, just in case you was thinking about purchasing a home. You'll have a little information going in. So there's a lot of fees when it comes to purchasing a home, from origination fees, processing fees, underwriting fees that these banks will charge you. And you got to be ready for that. That's going to be in the pricing or the closing of your loan. You're going to have to come at that closing with a check. You know what I'm saying? Whatever the closing cost is going to be. So these fees will be incorporated into that check. So again, I don't want to make this too long. We'll have some more videos on this, but we're in a high interest rate environment right now. So you got to consider, are you willing to pay the higher interest rate, knowing that a few years ago we was as low as 2%? Will we ever see that again? Who knows? Are you going to wait to buy your dream home, waiting for a new interest rate to come? Well, if you got the money to buy it now, why not buy it now? Now, the only reason why you won't buy it now is that you think interest rates are going to get lower in the next couple of years. We got a presidential election coming up. Who knows how things would change then? If you do buy a house now, just know that you're paying more today than what you would have paid a few years ago, because interest rates are up, which means pricing is up. We're in a seller's market today where sellers are in the driver's seat. There's not a whole lot of inventory on the market for buyers to buy. So as soon as a house comes on the market, man, they're on Zillow, they see it, they write up a contract without even going and looking for it. It's the wild, wild west out there now. You could get into a bargaining situation out there. A lot of people are paying 10, 20, 30,000 over what's being asked on the house, because there's just not a whole lot of inventory out there. Okay, so all those are things that you have to consider when buying a house. You got to have money in the bank in order to purchase a house. It ain't like buying an apartment where you just paying the monthly fee on the apartment. No, you got to have a lot of other things when purchasing a house. That's not even to put into play. What if you get in the house and something breaks down? What if the roof starts to leak, or the basement starts to leak, or your appliances go haywire? You know what I'm saying? You know, all these things you got to think about when you're purchasing a home. Do I think purchasing a home is still a great vehicle? I absolutely do. You know, our society teaches us it's better to, own versus rent. Well, I think it all depends on where you at in life, what your situation is, what your economic status is. I can't say one is better than the other. It depends on where I am in life. If I've got the money, yeah, I'd rather purchase. But if I don't have the money, maybe what I ought to do is rent and save until I do have the money. Do you feel me on that? Yeah. Look, this is Winston Bennett. We're going to cut it off here. Maybe we'll do another video coming up soon, okay? Have a great day. Thank you.